In the midst of the Carney King transition, the Bank of England has said it's open to new ideas to try and bolster a flatlining UK economy. However, at the same time, one policymaker maintained the hurdle of change should be held high. Joining me down the line to discuss his projection as to what the future holds for the UK economy is economist Peter Westaway. Now, Peter, in terms of a forward plan, BOE policymaker Paul Fisher has said a slower, more gradually supportive policy might be more appropriate and less risky to nurse the economy through the next phase of recovery. Do you agree this is the best course of action at present?
I mean, this suggested policy sounds a little bit like the Fed's open-ended QE, and so in many respects people are thinking this is the Bank of England getting ready for Mark Carney coming on board as from the Bank of Canada, who's also been making similar noises. I'm not quite sure this is the right policy to go down, simply because I think the situation in the UK is a bit different. Inflation is a little bit more sticky and above target, and so unlike the US, where some sort of open-ended policy until unemployment comes down might sound appropriate, it's less obvious that this is going to be appropriate for the UK. So in general, I'm not sure that changing the type of QE is the big issue. I think more generally, QE is probably not as powerful as it used to be, and perhaps more reliance on the funding for lending scheme and other mechanisms, policy initiatives like that might be more important for the UK at the moment.
Today we have seen confirmation that Britain's economy contracted by 0.3% in the last quarter of 2012 as first thought, keeping alive the danger of a third recession since 2008. Finance Minister Jos Osborne will draw little comfort from the latest release, less than a month before he is due to lay out his budget plans for the coming year. Does this make Osborne's job all the more difficult, or was he always going to go down the austerity route?
I mean, I don't think necessarily the news today makes it more difficult, and if anything, there was a little bit of good news today, because some of the back data was revised up, so maybe the UK economy probably wasn't flatlining during 2012. It actually grew a little bit. But I mean, whether or not there's going to be a triple dip recession or not is probably not the big issue. I think more generally, Osborne is still going to set out his austerity plans. I think in many ways the downgrade is going to steel his resolve and make it even more likely that he carries on with this. I think it's pretty unlikely that he'll ease off on the austerity, as some people are arguing. That wouldn't necessarily be a bad thing. I don't think it would particularly harm gilt rates if he were to do that, but I just think politically there's no way he's going to do that. So I think Osborne's sort of laid out the table already, and it's pretty clear what he's going to be doing. According
to Deputy Governor Paul Tucker, the Bank of England is considering negative interest rates in a bid to bolster the economy. The action would obviously be highly controversial, highlighting the lengths that the Bank of England feels it needs to go to. Now, we've seen Denmark and Sweden have already gone down this economic route. Do you think it could work for the UK at this stage?
It's a possibility, but I'm not a great fan of it. I mean, to be clear, this would be not necessarily setting negative interest rates for the policy rate, but it would be a negative interest rate for the rate that banks have to pay on the reserves that they deposit at the Bank of England. And I think the argument against this has always been that it would cause banks to get into trouble, because basically, while they can cut their borrowing rates, they can't cut their deposit rates, so it would eat into their profitability. So it's potentially damaging for banks. It's not completely clear that it's been an overwhelming success in Denmark and Sweden either. So again, I'm not sure this is really going to be the game changer, even though it sounds rather radical and exciting.
Analysts with Market picked out political tensions rising in the Eurozone due to inconclusive Italian elections, low consumer confidence at home, signs of still weak bank lending, and businesses remaining reluctant to invest as signs that none of the main causes of weak growth have been resolved so far. Now, today might have been a day of pluses and minuses for the UK economy, but are there any positives you deem sufficient enough to kickstart the economic growth engine?
Yeah, well, I mean, there aren't that many, but I suppose the obvious ones are, first of all, companies in the UK are sitting on a lot of cash, and all through the last year or so, maybe more than that, we've been waiting for investment to get going. And while there's been so much uncertainty around the sovereign crisis, it's pretty understandable why firms haven't been prepared to start undergoing investment. But I think UK companies are well placed to start investing when the kind of political tensions do die down over the sovereign crisis. Now, clearly, with events over the last few days, that isn't going to happen now, but going forward, that will be helpful. And then, I guess the other thing that helps the UK economy is the currency getting weaker. That was one of the plus points of the 2009 recession, which is that sterling plummeted by best part of 25%, which, as the Bank of England were arguing yesterday in their evidence, is one of the necessary conditions for the UK economy to rebalance. Now, sterling bounced back a bit, but now it's been weakening again. So, even though people talk about that in terms of doom and gloom, I think that's actually a positive for the UK as well.
Continuing on the note of the pound, it's now the worst performing currency of this year, overtaking the yen. Would you agree the sterling is no longer going to have the safe haven veil in 2013 as it had in 2012? And what is your outlook for the cable moving forwards?
I mean, I think it's fair to say, I think the differences between the monetary policy prospects in the UK and the US are maybe being a bit over-exaggerated. I don't think the Bank of England are going to be quite as loose as people are perceiving, and I don't think the Fed are going to start tightening policy anytime soon either. So, in that respect, I think some of the sort of downside influences on cable aren't quite as strong as maybe people think. And again, not going back to the point about how I think sterling in the long run does need to stay weak and maybe even weaker. Maybe over the longer run, sterling might weaken, but in the short run, I wouldn't like to make any strong predictions on that.
Peter, thank you very much for your perspective today. It's great speaking to you once again. Well, that's all from Peter and myself, but complementing our discussion is today's Pound Theme Targets and Focus programme with Navjit Gruwal, so please do click back for that. Bye for now.